Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. And I'm here with Nick Elward, who's head of business development with the Natixis, right?
That's right, Tom.
So tell us a little bit about Natixis. It's a very innovative company.
Yeah, Natixis is a large global asset management company. We're based both in France and in Boston. We distribute mutual funds, separately managed accounts, and now ETFs. We launched our first ETF this past year. We're excited to bring a Natixis Seeyond international minimum volatility ETF to market.
So let's talk about international investing and also controlling volatility, because those are some of the things you folks specialize in.
Oh, certainly. On the international side, we're excited about the opportunity for US investors to invest outside the US. Not that they haven't always been doing that, but in 2016, we saw US markets really rally, especially after the Trump victory in November. And we think international markets trail behind. And for 2017, we could see advisors reallocating portfolios into more international stocks and maybe away from US stocks. Then also the Trump victory in November brought excitement around the fact that infrastructure build-outs and tax reform could be part of the equation. So we think that drove US markets, and international markets very well could be someplace that advisors and investors want to be in 2017.
Absolutely, and you know, we know individual investors and advisors are underallocated overseas, but they know they need to be there. So with that, you have to have a strategy, and when you talk about hopefully reducing volatility, what's the idea behind that? How do you folks tackle that?
Yeah, certainly. So a lot of investors are investing in actively managed international mutual funds or ETFs in some cases, and certainly passive as well. And they have volatility that's at market in many cases. It makes sense to complement traditional volatility type products with low volatility products. When you look back historically at low volatility stocks and how they performed relative to traditional volatility or high volatility products, low volatility individual securities, stocks or funds have outperformed. So, but when you look at both the performance against the risk of these products, your Sharpe ratio, if you will, is even greater. So you have to think about low volatility or minimum volatility products in that space, and we see a lot of our advisors complementing, as I mentioned, traditional volatility international equity products with low volatility.
So with all the things that are going on overseas, people are concerned, they are concerned about risk, and volatility is a way to tackle that.
Oh, totally, and we look at 2016 and the volatility in the markets, and overall it wasn't very high. But there were a few peaks when you saw the VIX really spike above 20. And when you see that happen, you want to have some kind of volatility protection. And as we look at 2017, many analysts are thinking that with political uncertainty and potentially us getting to the back end of the current investment cycle or market cycle, that volatility could be higher. So what better time to think about low volatility than now?
Absolutely. Ed, great seeing you. Thanks for stopping by.
Nice seeing you as well, Tom.
Thanks.
Thank you.